All right, everyone, here we are with ticker symbol SRNE, Sorrento Therapeutics Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So, Sorrento Therapeutics was in a bearish run since October 13th. It broke through the 50-day moving average between the 15th and the 16th once, and now the bears have accomplished breaking through it one more time. The question right now is, could the bears bring this back down, or will the bulls be able to continue this momentum? Now, the lowest point reached, which is the support level, it's super important in this bearish run as it was falling, is 771. I'd write that down. Don't forget about that number because that's the lowest point. If that crosses 771, this could be well on its way to newer lows. But let's move our resistance and supports to their new locations. And our support is the lowest point before the bullish run, and the highest peak here before it got rejected and leveled off currently at 826. So the 50-day moving average is super important right now because the tug of war is going to happen. It's 817. I'd write that down. 817 is the 50-day moving average, and we're slightly above it. That means we're in bullish territory, and the moment we're below it, we're in bearish territory. Now, for the bulls to continue this momentum, they need to pull away from the 50-day moving average in an upward direction. By doing so, they need to cross this resistance. This resistance level is the first resistance level and the highest point reached in this bullish run, which is 836. The bulls need to break through 836, turn that into a support so they can start to work their way up to newer highs and pull away from the 50-day moving average in an upward direction. So super important. I want to emphasize, for this momentum to continue, the bulls need to break through 836 and reach newer highs and newer levels of resistance. On the other hand, we have what the bears want. And the bears want to cross the 50-day moving average to get back into bearish territory. But not only that, they want to break through support. By breaking through support, they broke through the 50-day moving average, getting back into bearish territory. And they're breaking through the first support level, pulling them further away from the 50-day moving average in a downward direction. So if the bears break through the 50-day moving average, I'd monitor how this stock is doing. But there could be a tug of war between the bears and the bulls, up and down and so forth. But if it starts to pull away fairly quickly from the 50-day moving average downwards, getting closer to 785, then I want to emphasize to all investors to definitely put your 1 minute, your 5 minute, your 15-minute charts. Check out the inflow and the outflow of who's dominating the chart. And if it breaks through support, this could be well on its way to newer lows and newer support levels. So pay very close attention to how quickly is it going down, how is it behaving, and so forth. Or are the bulls even having an opportunity to reappear and bring this one back up? As always, I hope that these cues are helpful and informative for tomorrow's trading day so that you guys can be well equipped. And for every first-time viewer and investor that came across this channel, and specifically this video, and you found it helpful and informative, and you haven't had the chance to subscribe, or you've seen my videos before and you feel encouraged to subscribe, please do so. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up, also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.